Right. Very interesting topic. Would be great to have a panel debate on just that. Some of the questions at the end there. The next talk will be Lasse Meholm, who is the head of blockchain and DLT strategy at the DNB Bank in Norway. He has worked in finance for many years and has both started and sold several fintech companies over the years. And furthermore, he's also the author of several books, among them about blockchain and cryptocurrencies. And today he will do a talk on the future of money and how tokenization will impact the securities market. Lasse?
He's coming. We need his presentation. He's not
great.
On here, so he has it there. So.
Can I start it?
Yes. Well, meanwhile, give a hand for Lasse.
Okay. Thank you for inviting me. It's nice coming after the central bank because and the headline today is this disruption. And what the central bank actually does, definitely in Denmark and Sweden, with the negative interest, is definitely a disruptive way of doing banking. There was a few professors in Sweden checking out has this happened in the history of money before, and I found that throughout the last 5,000 years we have never had so long area of negative interest rate in the central bank. So this is definitely something nice to look at when we're talking about cryptocurrency. And I'm going to go through the business model and focus on the business model for us banks. And the question is, does it change the business model forever? And if it changes the business model, it will be forever. Another thing is that technology cannot change the business model. It's us, it's the innovation, it's the creativity that change the business model. Technology can enable us to change the business model, but it's we that does it. So it's very different, very important to remember. For those of you that doesn't know what DNB is a full-service bank. It's the largest bank in Norway. It's the second largest bank by market cap in Norway after Nordea, and we are a full-service bank. We have some 35, almost 40% on the Norwegian market. And we do a handful of blockchain-based projects. We are a part of R3, so we use Corda in a project together with the ING Bank, Commerce Bank, BNP Paribas of France. It's a trade finance. It's all this document that goes over the border when you import and export. It's invoices, it's payment, order, bank guarantees, and so on. All this kind of paperwork. It's streamlined, digitized, and kind of robotized by using blockchain. And we use this using Corda. We are also looking into this new area, this new ecosystem growing up. Internet of Things, machine-to-machine payment. And we signed with a company in Germany called IOTA. I'm coming back to IOTA technology. It's not a blockchain, it's a distributed ledger technology. But we need to learn the business model. What is going to happen here? And something really disruptive is going to happen in this area. Then we signed with a company in Sweden. It's a small fintech company called Norway. They have made a project called Norway Know Your Customer. So just looking into this Know Your Customer thing, I'm using hyperledger fabric. And finally we do selling and buying of property, flats in Norway, together with a large Norwegian company. The Obos, they own some 400,000 flats in Norway. They also own a bank. So we do buying and selling of property together with Obos in Norway. And we use Ethereum as the technology. And it's a small fintech company called Blockchanger that does this for us. So, and we have a few more. And back to the business model, what is it that we make money from today? The main thing, 70% almost, is interest, is loan, net interest, money in and money out. Then we make a little bit money, 17%, from transaction, making customer pay internationally, issues shares, issue bonds, and so on. And of course, we also have some pension income. So, back to the really backbone of what we do in banking. Money. And what is really money? And that's where I started with this negative interest. Something is about to change, maybe, and this is a question mark. Because what is money really? First of all, it needs to be something you can use to pay with. You can go in the shop, in-shop or online, and really pay with it. That's the first thing. And the second thing is that it has to be store of value. So if you have a 100 Danish krona note, I put it here, I come back after 10 years, it's still 100 krona. It might be inflation in between, but it still has some value 10 years after. And the third thing is that you can make accounting for it. You can measure what you earn and what kind of cost you have. That is the three things you have to do to have in order to call it a money. So we have actually two kinds of money today. First, we have central bank money, that is cash, that is coins or notes. And that is something, and the value of those notes is something that the central bank owes you, that owe you this money. Then we have commercial bank money, and that is money that the commercial bank owes you. Everyone knows how money is printed? Who hands up? Okay, less than half. The way money is made today, and it's actually, the bank made it out of thin air. The way money is made is if I, for example, want to have 5 million Danish kroner, because I want to buy a flat. I go to the bank and I'll apply for 5 million. Bank send this 5 million into my account in the bank, but I have to give them something back. I have to give them a guarantee, so that I can, for example, sell my flat to cover up for the loan if I cannot pay. So in the balance sheet, on the positive side, on the asset side, they have the loan, the money they sent to me. On the negative side, or the liability side of the balance sheet, they have my guarantee. And this 5 million is not collected from the central bank or anything else. They simply print this money out of thin air. So this is how it works. So this commercial bank money in Norway, this is 97.5% of all money, money supply. In Sweden it's 98%, I don't know the number for Denmark. But it is the bank that owes you this money. So if the bank goes bankrupt, your money lost. There's absolutely nothing that's supported, unless we have this 100,000 euro deposit guarantee. That's the reason we have it. But what happens if we have this new kind of money, this private money, this crypto money coming in? And what happens if that money is free of interest and it's a substantial part of the money supply? It's a question mark. And it's not only internet or IT company providing this kind of money. Here's Binance. They are one of the largest cryptocurrencies, crypto exchanges in the world. they have a kind of stable coin. They printed this money. But you also have these banks. Some of the largest banks in the world, they're coming together to kind of make money. That's kind of stable coin type of money. So it's not only technology doing this, but bank doing this as well. And if you look at, for example, the Bitcoin price, the reason Bitcoin and Litecoin, and even though the Lightning Network doesn't work that good, is because of the volatility. If you, for example, buy something here, let's say you think it's 1,000 Danish kroner, then you have to pay after a week because you have the delivery at home the week after, and it's 2,000 or 3,000. It doesn't work that way. So we need something that is more stable, and that's the reason this stablecoin comes now. And we have stablecoin based out of fiat, so you put money in the bank, and then you can get coin back from this deposit, and you can use this coin to pay and so on. Or it might be gold back, come back to gold back, or it might be asset back, and that's kind of more scary for us banks. So you can back it by a property or something else. This is not a short course in macroeconomic, but something is going to happen here, I think. This is the IS interest and saving curve. So let's say a lot of people starting to buy and invest in, for example, property, new flats. So the IS curve move to the right. Interest increases, and when interest increases, let's say we are in Norway now, then we get a new balance. The market is starting to buy Norwegian krona. Norwegian krona goes up, and then the Norwegian krona goes up. Then Norwegian export goes down because Norwegian product outside Norway is much more costly. Then we have to reduce the interest again, and we are back to start. So there is something that has gone on over hundreds of years that might be changing because of this new money. And the question for us, and back to the business model, is what is it that we're going to make money from in the future? Should we do the custodian, make sure that no one steals whatever you have in the wallet? Should we use the cyber security kind of thing that we have developed over years, or anything else? We have to look into the business model here, because something is really going to change. If, and I say if, this new kind of money will take a substantial part of the money supply. We also looked into this tokenization. This is a project from New York. It's a luxury apartment. Instead of going to the bank, they needed 30 million US dollar. Instead of going to the bank last summer, I have a loan. They tokenized the whole project. They said we need $30 million, and we issue coins for this $30 million. So people could buy this coin, either for 10 krona or 100 krona or 1,000 or 10,000 or million, whatever. So it's more for smaller investors. And they managed to get this 30 million last year. And what they do when they sell this flat, this house, is that they take let's say they sell it for 100 million. They take 100 million divided by the number of coins. So every investor buying this coin is a part of this benefit or this profit made from this project. So for us as a bank, this is disruptive. If people started to do this rather than going to the bank and have a loan. And I already said about this gold-based stablecoin. This is a stablecoin based out of gold stored at Dubai airport. But in this case, you have to trust the company. There's nothing. You have to trust that the company really have this gold there. And another thing when it comes to tokenization, and tokenization is quite important. It might change the way we do business in the future as a bank. This is a stock listed company in New York. Instead of issue new shares, as they could last summer, they issued coin, $30 million. And by doing so, they didn't need to vote out existing shareholder. And the mechanism of trading this token is different from trading shares. First of all, you cannot buy half a share, but you can buy half a token or 0.25 token. And you can put the token on an exchange much cheaper, much better, and much faster than equity exchange. So the whole mechanism changes here. And for us as a bank, we have a quite large DNB market part that do all this kind of stock trading and so on. For them, this is very important to follow. Is this going to happen? And is this something that really will change and disrupt what we do in the banking? The third thing here is Internet of Things. And again, we as a bank need to learn and focus on what's happening here, because this is a completely new ecosystem. It's a new way of doing business, and it's a new way of paying. So for us, we have signed with IOTA. It's a German distributed ledger technology company. It's a little bit Norwegian, but because it was 4 people that started this company in 2014. One of them is Norwegian. So we feel it's a little bit Norwegian. But if you look at traditional blockchain, you have thousands of transactions coming in here, and then someone has to mine them. So there's kind of funnel, and it slows down the process, a number of transactions per second. And then you have a serial line of transaction within each block there. What IOTA does, and some say it won't work, and it might happen, but for us it's learning the new ecosystem. For each transaction, you get the consensus of having 2 other to give consensus of each transaction. This means if you throw in, let's say, 100,000 transactions per second, you will have consensus within a microsecond. So the whole mechanism of getting consensus of the transaction is completely different from most of the blockchain and distributed ledger technology. This means that it's extremely scalable. It's zero fee. It doesn't cost anything to do it. You don't even need a mobile telephone to kind of mine each transaction. Low resources, and what's important is that they can also do it offline. Some says, as I said, it might happen, IOTA won't work, but we need this kind of technology. We need a technology with this number, with this scalability, and we need a technology that can go offline. So we spend some time with IOTA, and we do some workshop with them, more about how this new business model is going to change what we do. Here is an example. It's from Canada. This car pays insurance every 1 hour. If you see the transaction down here, they pay insurance every 1 hour. And for the last transaction is 0.336 Canadian dollar for that hour. And this price is based on whether the car is inside of the city or outside of the city. If it's speed, it goes slow, and if it's brake hard, which means it's aggressive, the price goes up. But the price might be every kilometer, every minute, every half hour, and so on. And on top of that, this is again something that IOTA does. On top of that, they have a marketplace. So the car choose insurance every hour, depending on who's cheapest. So there's a way of using the sensors in the car. It's a way of putting everything outside on a marketplace, and it's a way of buying and selling. So the whole mechanism is really changing here. And we have micro payment. If it's every minute, for example, it's 0.0001 Danish krona. So the whole mechanism is really changing here. Here's another example we're looking into. We have a lot of salmon farmers, or all kind of fish farmers in Norway. It starts with an egg, and then it's a small salmon, small fish. And when it's a little bit larger, it's put out in the seawater. And then you can measure the volume of the fish and number of fish per cubic meter seawater, the temperature in the seawater, the salt, and so on. And then you can measure how much medicine it gets, how much food it gets. And then there's this slaughter, then you can measure the temperature and the humidity in transport and so on. And so when you come to the shop, you can scan the QR code and see this is 2 days old and it's I haven't almost no medicine, so it's fresh and it's good. So it's good for me to eat. But for us as a bank, we give them a loan, we give them a credit line. We would like to be more dynamic in the way we give credit to companies like this. And using the sensors out in the seawater, out on land, is perfect for us to kind of be more dynamic. And blockchain and distributed ledger is a perfect technology because no one can tamper with anything coming from the sensor. You have to trust the sensor, but you don't need to trust anything in between because you have the original information there. And blockchain is also perfect for sharing information. So the farmer is there, the transportation company is there, the consumer is there to see how fresh it is. We are there as a bank, we can give them credit. And then the government is there as well. They need to check that and make sure that the food we eat is healthy. But if this company doesn't need a credit, so actually they don't need us as a bank, then we can help them to tokenize the value of the fish and sell it before they really slaughter and finish it. So they can start selling the volume much higher up in the value chain. And this will completely disrupt and change the way we do business as a bank. So it's definitely micro and nano payment. And the last thing I would like to mention is smart contracts and counterparties, and you have been into it already. This is a very simple example. Buying and selling on a flat. And this is a little bit of what we do with the other bank in Norway. It's property sales. So the seller posts a sales prospectus, for example, online. Then the buyer make a bid, and the seller and the buyer agree. So far, it's maybe an internet platform. Then we in the bank need to have an application in. We need some documents, some salary, and so on. Then we need a system to store this kind of information. It's not on the web. And again, we need another system to check that the credit check, a person involved, and another IT system need to be involved. And this IT system might be from 1980, based out of COBOL or whatever. We have a lot of legacy old system there. And then the seller, we have to check the collateral and do some work around that. And again, we started to pay and do the transformation. And finally, the buyer pay and the seller transfer the ownership of the property to the buyer. So we have a number of IT systems involved here. We have a number of people involved here. We have a number of part of the organization involved here. And if, for example, we change our strategy, we do not anymore give loan for this kind of thing to people, let's say, under 30 years old, and they need to have 50% in cash before they do the buy and so on. If we want to change this kind of thing today, we need first to change a lot of IT systems, and it might take months or maybe half a year and cost millions. And then we have to educate people in the organization that we have done this change. But what if, and I say what if, we can do the whole thing by using smart contract. Instead of changing all this IT system, we can use a small shell of application and put the whole business logic inside of the smart contract. If that is possible, and I say if that is possible, then it will take us a week or maybe two to do all this change rather than a number of months. So the scalability, the time to market is completely different. Another thing is that in the end, the seller receive money first, and then he give the ownership back to the buyer. traditional system do one thing at a time. Blockchain do both things at the same time. We call it atomic stock transaction. Blockchain is the only technology that can do this. And by doing so, we simply remove counterparty risk. And this is a big change. For example, Statoil or Equinor, as it's called, they sell oil now together with Shell and British Petroleum on a blockchain platform, removing counterparty risk by, if you pay for the oil, then you also have the ownership of the oil. And it's a full ship, hundreds of millions, based on oil sale. Because they use smart contract and they use this atomic stock transaction. So it's a completely change of what we do and the way we do things. So back to the business model. In the future, I guess that we will be less depending on net interest and more depending on something else. As Bill Gates said in 1994, banking is necessary, banks are not. But we are here around now, and we will be in the future as well. So, thank you.
So we have time for a couple of questions. Down here.
A lot of these concepts are more like proof of concept, I think, right? Or to what extent are these already reality? And if they aren't, what time do we need to make them?
Yeah, that's a good question. This Marco Polo project is none of them are in production. None of them. But this Marco Polo project is late pilots. We have a few customers testing it out in real life. We plan to launch it in October, as I said on the slide. We didn't manage, so we hope it will be before summer.
Which project is that?
Sorry?
Which project is that?
Marco Polo, the trade finance.
Okay.
And also the property sell and buy is also in pilot, and we also put that out on a few customers. So we sell kind of late pilot. The rest of them are early pilot and proof of concept. Yeah.
So according to you, which are the real fundamental barriers or challenges to get effective tokenization of all the kinds of things we want to tokenize?
Well, it's not that actually. It's not that technology. It's more like the organization. We struggle to get funding, and we struggle to persuade people in the top management. This is something that I really should do. So it's and the technology is not that matured yet, and we struggle to should we focus on Corda or Hyperledger Fabric or Ethereum, and there are too many things that is not matured yet. So it's a combination that might slow down the process or have a problem, something you need to do better.
And what does it look like on the non-technical side of the challenges?
What does it look on the
On the evaluating the value of all these types of assets we would actually want to evaluate effectively.
I'm not sure.
So, for example, on the salmon example, what are the non-technical challenges of evaluating the value of salmon in?
Yeah. No, the technical, is again, it's the organization. Should we do it or should we not? We know we have the technology, and we test it out, and we do it actually together with another company. So we have the whole value chain. That again, this kind of disrupts something of what we do today. But because what we do today is that we go into the balance sheet and the annual report of the company and give them a credit based on that. So do we dare to do something else? So it's the organization, it's the mindset.
Final question?
Just one question. You mentioned in your slide with the different kind of money, cash and commercial money. And then you have the new kind of money. What about, I mean, the commercial money was, as I understood it, was basically loans.
Credit. It's credit. Yes.
So what about private credit? I mean, there's a lot of transaction going on between private individuals that it might involve a bank, but there's also a lot of things that just go on like give you a loan, or and all these. I mean, isn't that really one of the biggest and more revolutionary spaces for the new kind of money to sort of facilitate those kind of exchanges, private exchanges between private individuals?
So that's right. So if I give you some money, the money I give you is actually a credit somewhere. I might get that money from someone else, but that also, so they're starting with a credit. So all money in the world is credit. So if everyone pays everything they own to the bank, then they don't have any money left. But this new money, and every credit has some interest, so it's a cost. But let's say if, for example, Facebook or Amazon starting to print money, and they are not interested in interest rate, they want people, they want to turn around. So then the whole process is changing, and what we make money from, I mean, 70% of what we do in DNB is loan. If people doesn't need that kind of money anymore, well, this is a completely new world for us.
All right. Thank you very much.